Insurance bad faith is the term for an insurer unreasonably failing to perform its duties under an insurance contract. You see, insurance companies get kind of a special deal in our economy. They get the right to charge premiums and accept money from people like you and me month after month, year after year, on the chance that something bad might happen. That's why the law imposes a special duty of fairness and reasonableness on insurance companies for when something bad eventually does happen and a claim gets filed under an insurance policy. There is no uniform law for what constitutes bad faith. It's different from state to state, but for the most part, it falls under three broad categories. The first category is processing. An insurance company must respond reasonably quickly to a claim, it must communicate reasonably quickly, and it must keep and enforce its own internal standards as to how it processes an insurance claim. The second broad category is telling the truth. An insurance company may not lie about the facts of a claim, or about the coverage available under an insurance policy, or about the processes and standards that an insurance company applies when evaluating your claim. The third category is fairness. An insurance company may not unreasonably deny a claim. It may not unreasonably withhold payment on a portion of a claim. So what does this mean for you, the restorer? Bad faith is important to a restorer because it may be the fallback position on your claim for money under an insurance contract. It's your big gun that you might need to get out if you aren't treated reasonably or fairly. If an insurance company had free rein to just deny coverage for silly reasons or for no reason at all, or if it had free rein to just simply lie about the facts of a claim or about the coverage under a policy, it would be able to put up hurdles to people getting money. It would increase costs on restorers like you, and it would probably save them a bunch of money. So instead of that happening, the restorer has the possibility of suing on a claim for bad faith because they unreasonably reduced your payment or because they did other things that violated their duty. So what would it take to prove a claim for bad faith? First of all, as a procedural matter, you, the restorer, would need to have an assignment of benefits, not just a direction of payment. That's an important procedural step that we will discuss in a different video, but the assignment of benefits is important. You would also need to have proof of the underlying facts that constitute the claim for bad faith itself. And that would be the timestamps on things like email messages, if your claim was about the timeliness of their response or the timeliness of their payment. And this right here is actually an excellent reason to use email or other time-stamped communications at all times. I don't just mean text messages. The emails will allow you to make sure that your communication is saved at both ends. They're fully respected in courts, and they're an important part of your proof. Another thing that you could use as your proof is you could use your actual photos that you take of the underlying loss and of the actions and the mitigation actions that you, the restorer, take. This is a reason to take lots of photos. If you have a fancy smartphone, it's probably got tons of room on it. Use it. Take photos of everything that you do and keep them. Also, I want to note that it is not necessary to prove that the insurance company was necessarily being malicious. So even if the adjuster wants to do the right thing, and most of them do, even if the insurance company thought that they were doing the right thing, if their underlying, if their conclusion, if the thing that they end up doing is itself unreasonable, you can still potentially sue for bad faith. So for practical purposes, what does this get you, the restorer? In many states, winning a bad faith claim means that you can get your attorney's fees added to the amount of the judgment. Sometimes you can get punitive damages added as well. That's an additional fine that's imposed if the defendant is actually acting maliciously. So the possibility of an increased money judgment from a bad faith claim is a powerful incentive to keep insurance companies honest and reasonable. It makes sure that communications are clear and on the up and up. It helps push the insurance company to treat you, the restorer, fairly, and it helps push the insurance company to pay your bill in full and on time.